It's no secret that the IRS has been under intense scrutiny lately, but they have made some pretty key announcements recently, and we need to break down exactly what those are because currently, as of this moment, millions of Americans are still struggling and they're looking for some sort of relief. When inflation rose by 2.9% in December, it doesn't make for a healthy economy or a good, prosperous environment for the American people or the American companies. So, what does that mean going forward and what is the IRS proposing? Well, the IRS have given us some key updates here. There are 3 points to note. First, $1,400 stimulus checks. 2, we now know the tax filing dates. And 3, there are going to be some major changes to the 401ks. So we'll take a look at all of this and we'll break down exactly what is going on and what the IRS are putting forward in terms of this policy. But before we get into it, it takes just 2 seconds. If you enjoy this video and you enjoy this kind of updates, please do consider hitting the like and subscribe button down below. And without further ado, let's get into it. So let's get straight down into this. Who exactly is eligible for a $1,400 stimulus check? And what do they need to do in order to get it? Let's take a look at this. Taxpayers could get a $1,400 stimulus check by the end of this month being January of 2025. Now, according to the IRS, they have already sent out the majority of these stimulus checks. So if you've already received yours, then great, you're all set. If you haven't received one, or are wondering if you're eligible to receive one, well then here's what you need to know. In terms of eligibility, taxpayers, and this is according to the IRS, taxpayers who did not claim the recovery rebate credit on their 2021 tax returns are eligible for the latest $1,400 stimulus check. And taxpayers can check if they claim this credit by looking at their 2021 tax return and checking if they left the recovery rebate credit field blank or filled it out as 0. So, those who did not claim the recovery rebate credit are the ones eligible for this latest stimulus check from the IRS. But here's the thing. It's all dependent on your 2021 tax returns. And what if you didn't fill in or file your 2021 tax returns? Well, take a look at this. Well, the IRS is very well aware of this because they've addressed it here. What if a taxpayer didn't file the 2021 tax return? Well, those who didn't file that 2021 tax return may still be eligible for the latest stimulus check, provided that they file their tax return and claim the recovery rebate credit by April 15th. So you're still in with a chance of claiming the latest stimulus check. All is not lost on that front. Now, in terms of how you go about actually claiming the money, there's no need to panic. You do not need to get in touch or contact the IRS in order to do that, because taxpayers do not need to take any action to receive the latest stimulus check. The IRS began automatically sending out late payments in December, and they will continue doing that through to late January. And eligible taxpayers will receive a letter notifying them of the payment, and the payments will either be automatically direct deposited or sent by paper check. So don't worry about needing to get in touch with these guys. They will get in touch with you if you are indeed eligible. So, those stimulus checks were the first big announcement from the IRS. Here's the next one. The IRS announces the start of the 2025 tax filing season. Now this is of course very important because as of this moment, you can start filing. But, if I have a read of this section here with you, when are taxes due, you'll find that the IRS will not actually start processing them until much later. Let's have a read of this. While the IRS won't begin processing returns until late January, you can submit your return now on the agency website and it will be automatically filed on January 27th. Now, employers and financial institutions have until January 31st of 2025 to provide individuals with the W-2 and 1099 forms for 2024. Basically, what that means is you can actually start the process of filing your tax returns right now. Of that, there's no problem. You can begin whenever you want. But you can't finish the process until you get supplied with the W-2 and the 1099 forms by your employer. As soon as you get those, because that's when you can report your income, then you should be okay to finish that tax return process and file them away. Now, in terms of the actual deadline for when this needs to be done by, it's mentioned here that the last chance for the American people to file will be Tuesday, April 15th of 2025 at midnight local time. But as a general rule of thumb, please do not leave filing your tax returns to the last second on April 15th, because then it's just going to become chaos, not only for yourself, but for anybody else who didn't file their tax returns. So if you can, please get them done as early as possible before that deadline. So, that's the second big thing. What's the third big thing the IRS announced recently? Well, take a look at this. IRS announces pension and retirement plan contribution adjustments for 2025. The IRS has announced an increase to the amount individuals can contribute to their 401k plans in 2025 to $23,500, up from $23,000 in 2024. So what does that mean, and is this good news for you, the person who's contributing towards their 401k, also known as their retirement plan? Well, the answer is yes, it's very good news, because each year the IRS sets a limit in terms of how much you can contribute into your 401k. Last year, that limit was $23,000. This year, it's been increased to $23,500, meaning you can contribute a lot more of your salary towards your retirement plan, whilst also reducing the amount of income that is taxable over time. And these contributions are made before you file your taxes. So the money you contribute towards your 401k, if you contributed the full $23,500, that would keep growing over time tax-free until you eventually do reach retirement and start withdrawing it. Let's look at some examples here. Let's say there's an individual in the United States earning $50,000 a year in both 2024 and 2025. So, in 2024, when they had a $23,000 maximum 401k allowance, they would have paid approximately $6,480, assuming a 24% tax bracket. Now, if we look at 2025, when the maximum 401k allowance has increased to $23,500, they've been able to pay $6,360 in taxes. They have paid less taxes because the maximum 401k allowance has increased. So you have saved more money long term. This could actually be a very transformative year in the United States, and 2025 has already thrown up some brand new changes. When you have the likes of Donald Trump returning to the White House, his administration is now taking over Joe Biden's administration. The plans to create an external revenue service, who knows? We could start to see the IRS start to diminish and play a much smaller part in the everyday lives of Americans. But for the here and now, these are the major announcements they have made recently, and it's very important that all Americans are aware of what they are planning to do and what they have already done. You know, the Republicans have control of the White House, they have control of the Senate, they have control of the House of Representatives. Big changes are coming in 2025. Now, what those changes look like, and as for a timeline as to when they happen, if at all, we don't yet know, because of course there are numerous legal hurdles they need to overcome. But as of today, this is what we know so far. Thank you all for watching. Be sure to like and subscribe if you enjoyed this video. Drop a comment down below. Let me know your thoughts on the situation. Have you received your stimulus check in the post already? Are you still waiting for it? Do you think Trump will diminish the role of the IRS heading into 2025? Let me know your thoughts down below. All opinions are welcome. As usual, I'll be returning in the coming weeks with some more updates, but until then, see you all later and take care.